So I've been really looking forward to this panel because in leading up to this conversation, we've heard a lot from the investors about the macro trends, about the types of investors and types of investments they like to make. We've now heard about the markets and what's going on within those markets for the forest products. Here in the panel, we have a group of people that actually do the investments. These are the people that invest into the transactions, identify those transactions, and on any given day, the people in this table, they might be negotiating with someone, they might be managing a tax issue, a stamp duty issue, an environmental issue, a forestry issue, an employment issue, a competition issue, trust, corporate law issues. All of these things come up in each and every transaction we deal with, and these people have been in amongst the trenches dealing with that, so it'll be quite an exciting and lively conversation. In the lead up to this meeting, I certainly gave these guys the rules of engagement. I encouraged them to challenge each other during the course of the conversation, and hopefully they'll be doing that. By way of introduction, as Mick mentioned, I'm Director of Investments, so all of the investment transactions that New Forest has pursued, I've been deeply involved in running those investments. Across the panel here, the far side, we have Gerrity Lansing. Gerrity is the head of the Timberland investment group at BTG Pactual, and which has about $3 billion of commercial timberland across the Americas, Europe and Africa, so clearly well qualified for this meeting. Immediately to my left is Charl Pienaar. Charl's a non-executive member of New Forest, but is also a member of the regional investment committees. And I have to say personally, reporting through to those investment committees, Charl has the innate ability of asking the one question that immediately having asked it, it seems bleedingly bloody obvious, but no one else has asked it at that point. In his prior career, Charl's been a direct investor in projects both in here and Asia, and in particular has been responsible for establishing and managing an upper quartile international private equity portfolio for a leading Australian insurance and asset management firm. And last but not least is Bettina von Hagen. Bettina is the Chief Executive Officer of Ecotrust Forest Management, which is a company that specialises in acquiring and managing the carbon-rich forests in the Western North America. And is also, for the most folks in here would be aware, is a founding member of the Forest Trends Board and is also on the board of the Verified Carbon Standard. So with that, we'll kick off to some questions, and I think what I'd like to do is start with Gerrity on the far side there. Gerrity, you're a specialist in investing to what could typically be classified as low-cost fibre pulp production markets. Just interested if you could give us some commentary on what the changes in the capacity that have been occurring there and what that means for forestry investment opportunities, which is what this panel is.
Sure. So briefly, about a little bit more than 50% of our assets are in the Americas or in North America, and a little bit less than 50% are in Latin America, mainly Brazil. And so when we think about the next 10, 20 years, we think about, in some ways, pretty simplistically, in addition to all the other elements that other panelists mentioned as well, but who's going to buy the wood, right? So who's going to construct the facility that's going to end up buying your timber if you're investing in it? And one example is in the pulp space. The last pulp mill to be constructed in the US was 1989. The last pulp mill to be constructed in Canada was 1990. So most of those pulp mills are vintage 1980, 75, Back to the Future type stuff if you think about it. And that compares to a place like Brazil. Brazil basically in each of the last 10 to 15 years has made an investment of at least $1 billion capex in brand new industrial facilities. Why have they done that? Well, trees grow a lot faster there. You can produce 1 unit of production, 1 ton of pulp, and ship it to Europe from Brazil at about half the price is what it costs to do in the U.S. So we really think that's a trend that's obvious, that's going to continue. I'm not saying the U.S. is over. I mean, again, we have a lot of investments in the U.S., but in something like commodity pulp or hardwood pulp, we think that's a trend that's really going to continue.
Thanks very much, Gerrity. So maybe Charl, I'll throw across to you then for the comparison case, if you like. Australia and New Zealand would typically be categorised as more of a high-cost producer compared to what we've just heard from Gerrity. What would be your commentary in terms of the changes in capacity there, and in particular, what the differentiators are, the role of the manager might be in those markets?
Thanks, Dave. Is that loud enough? Yeah. I guess we are in the business of growing good forests, but we're also in the business of growing good investments. And when you step out of the forest into the investment arena, the context differs. So, I'm quite amazed by some of the productivity differences at the biological level, comparing, say, Chile with Australia in terms of MAIs and lack of bugs that eat the blue gums and things of that kind. But if you go to investment context, and by that I mean all of the sovereign, political, legal, regulatory, land ownership, other issues that allow you to grow a good investment as opposed to purely a good forest, I think with few exceptions, the advantage goes to the higher fibre cost regions. So they coexist, but it's a matter of emphasis. In Australia and New Zealand, where you can acquire, own, operate, and exit in forestry investments, fairly unfettered and fairly confident that the investment environment will remain stable and strong. It leads to a certain emphasis on buying well. For example, some of New Forest's acquisitions in highly complex transactions where a lot of value is created. Doing aggregations in New Zealand, these are areas where you need to have a competitive advantage to play in the acquisition. You can then turn your attention to really improving these assets at all levels: genetics, logistics, management, but very importantly, establishing a competitive advantage as being a scale, stable operator that can be there for the long haul for many of our customers and our suppliers. So that's the sort of emphasis, and Keith and Matt and people will talk about how you squeeze that value out of these great assets. Our experience in Asia, a cheap fibre region, you do operate in the shadow of those macro risks, sovereign, political, legal. We all know that. There's nothing much to discuss. But at the more micro level, due diligence can deal with a lot of these things, but not fully mitigate them in terms of counterparty risk, relying on a concession rather than a freehold right to land. So the emphasis of management needs to be different. So having that biological growth is great, and we certainly strive to increase our innate productivity to start matching or to start building out that gap. But the only point to make is that growing a great forest is an advantage, but it's not a sufficient condition to growing a great investment in forestry.
Thanks very much, Charles. So we might have a bit of fun with one or two of the concepts there. So maybe I'll just flick back to Gerrity, and I'm going to scare them by wandering off the script. Gerrity,
this wasn't part of the deal.
You've just heard Charles' commentary in relation to the role of the manager in the high-cost environment, and some commentary around the nature of the due diligence that's undertaken in an environment where we do have that relatively unfettered access, as Charles described it. You've got investments in both North America and South America and the likes. Can you compare and contrast any of the types of due diligence that you would do into those investments on behalf of your investors?
I mean, how are they differentiated between the regions?
Yeah, where you negotiate the risks and how they're differentiated between those regions. Yeah.
Well, I mean, in the U.S. is just a much more transparent market. It's fully developed. It's the biggest timberland market in the world. Probably 3/4 of the institutional capital is invested there. You can see when you're buying something the price which it was purchased for 10 to 15 years before. Title is very clear, and environmental issues are pretty transparent. That's not always as much the case in other geographies. I mean, we have some other assets actually in Eastern Europe and also in South Africa. And they're a lot more complicated. And then also in Latin America and in Brazil. Title is not, title people sort of think is the obvious issue. It's not as much that. There are a lot of regulations in Brazil. It's an extremely bureaucratic place to operate. And so you have to be on the ground. You have to be like the new forest in Australia. You have to be the same way in any geography you're operating in to understand what's going on so you don't make a horrible mistake. Because from our perspective, for sure, a big part of the return generation is the actual asset management. It's actually what I saw and was incredibly impressed with this week on the site tour, for those who were invited. And I'm sure you'll get invited to the 20th reunion one, don't worry. And there was a huge potential for uplift in MAI. But anyway, I think that's important. But I also think acquisition and the buy is super important as well. You can't mess that up.
Yeah, it's certainly easy to mess up if you get it wrong.
Yeah.
So we'll just, we've heard from the low-cost type of environment, we've heard about high-cost environment and the role of the manager in that environment. So a question across to you, Bettina. You've pioneered the role of eco-products in forestry investments, particularly in the native forests in North America. Just interested whether or not you see those eco-products continuing to be simply part of the mandate, or does it become a completely differentiated asset class? And again, let's explore that within your commentary. Perhaps we can also explore the nature of the due diligence that you do within those investments.
Sure, and just a little bit of context on Ecotrust Forest Management first to sort of set the stage. We're focused on the Pacific Northwest, which is, I think, a geography that's known to many of you, and you know, of course, it's a natural forest management environment. It's also a place where sort of institutional investing sort of had its birthplace. So it's a very mature, high-cost place to acquire and manage forests, and a place that's very well serviced in terms of mills and infrastructure. So if you're going to invest there, I think you need a special something. Would just be one comment on the Pacific Northwest. The second comment is it's natural forests, and it's not unique to natural forests, but the Pacific Northwest, in addition to producing world-class timber, is also unique in its ability to store carbon. It provides water to numerous communities. It provides habitat for the iconic Pacific salmon, northern spotted owl, marble murrelet. It is the playground for the region's residents. It's important in terms of hunting and foraging. It's incredibly important to many of the tribes that inhabit the region in terms of, it was their ancestral forest land, but also important to them in terms of their cultural harvesting and so on. So it's really a forest that is really significant for a whole variety of uses in a place where population is growing and where climate change and other threats are reducing those resources. So, what seems logical to us, both in the Pacific Northwest and other places in the world, is that you would manage for that full range of products and services. That you would manage, of course, for timber and the importance it provides for shelter and all of the other forest products that are important to us, but that you would also increasingly manage for water, for carbon sequestration, for habitat, for recreation, for those scenic values, for all of these new emerging industries we're also talking about in terms of bioenergy and other bioproducts. I think that for us, eco-products are a very natural extension, in fact, sort of like the obvious conclusion around Pacific Northwest forests, but I look forward to talking more about, how significant I see that in other regions, including plantations, and of course that topic is not new to New Forests, and New Forests is, I think, a real leader in incorporating those environmental and social values in plantation forestry as well.
Fantastic. So we'll come back to one or two of the points around the incorporation of eco-products, but just wanted to talk a little bit more about these differentiators within the types of and the mandates that we have within forestry investment. So perhaps I'll flick back to Charl for this. We've just heard that the role of eco-products is something that's additive to potential forestry investments. From the point of view of the manager presenting forestry investments, Do you see that as the logical extension for organisations that are skilled forest managers into those investments, or is it more about taking those skills to new geographies, or even further expanding the mandate up and down the value chain with vertical integration?
Thanks, Dave. I think what Bettina's doing is, it is the future, and New Forests is also involved in the forest carbon and various other initiatives in the States. So yes, that must get more and more important, and to me it's inevitable that gets transferred into commercial forestry in various ways. The presence of a regulatory trigger is obviously critical for that, and the regulatory triggers provided in California. You look at the way that forest carbon, and prior to that through the Clean Water Act, the mitigation banking business in the States has not only demonstrated itself but become just fundamental in the way that business is done. We had a barbecue in some Tasmanian forest, which was smack bang in the middle of our hardwood estate. So that hardwood estate has 175,000 hectares, of which 75 is native forest. We can protect that for now, but as yet don't have those kind of regulatory triggers. I guess we could find philanthropy or public funding for those kind of activities, but it would be much better if some kind of market was established for those environmental values.
What about you, Gerrity? I'll put you on the spot again. From your point of view, the growth of BTG Pactual into the markets where you're operating, is it an opportunity for eco products, or are your market differentiators around geographic and mandate expansion vertically?
Well, I think it depends which market. I think probably the more developed eco products markets are certainly the U.S. with respect to carbon, water mitigation, banking, that type of thing. There really are no markets like that in Brazil from a regulatory standpoint, at least not in the areas that we're invested in. We invest only in commercial forests, so we're really in the bottom 6-7 states, as opposed to the Amazon and the northwest of the country. And I know that in the Amazon there are some schemes that have hooked up with some regulatory schemes in the U.S. as well, but where we are, that's not the case. I will point out, though, in Brazil, land is a very important thing culturally, and there's a lot of regulation around it, as I mentioned before. And for example, contrasting agriculture versus timber. In the ag space, the Ministry of Agriculture regulates all ag activities. And a lot of people criticize what's happened in the last couple decades in terms of the expansion of the agricultural complex, and in some ways it's understandable, because they really use most of the land. Right? It's about maximizing the yield on every single inch of the land. Timber is different. Timber is regulated under the Ministry of the Environment in Brazil. There's significant setbacks. Typically speaking, we only plant about 50% of every hectare we buy, which even compared to the U.S., typically it's 70% in the U.S., something like that. So it's a little bit more command and control versus markets, but I think that it still works.
Very good. So we might just explore the eco products point a bit, and then I'm going to come back to some hard IRR type questions and throw them in and frighten them as well. So Bettina, in terms of your experiences in the Pacific Northwest, we spoke about the role of the rule of law in providing the environment where those markets can thrive and eco products can thrive. Are there some learnings that you can share with the room that people can take back to their own areas where they're operating?
Sure, maybe. We'll see. I would just say, in terms of the larger context, I did like the comment, I think it was Brian's comment, that the next century is really going to be the biocentury, really the ascendance of wood. So, I think the important thing is that, forests, whether they're plantation forests, currently established, new plantations, whether they're natural forests, play an incredible role in this world. And I think we just need to recognize, sort of their global significance on the landscape. And, there's going to be just increasing demand, with new markets, new sort of bioenergy opportunities, bioproducts, the need for wood and shelter, to expand the role of the presence of forests on the landscape. And that's going to compete with agriculture, potentially, and compete as well with pasture and livestock. And so I think it really commands a sort of new way of thinking about, I wouldn't think about eco-products as a distinct category. I would think about what we want, not what we want, but what we need forests to be in the world, in the presence of that increasing demand, and in the presence of climate change, and in the presence of resource scarcity. So it's about forests in terms of their ability to provide, not only fiber, but their ability to provide water and recreation and carbon storage and all the rest of it, and how they can potentially not fight with agriculture and rangeland, for land use, but how you can integrate cattle and livestock, for example, into your forest operations, which we're beginning to do, and use cattle, as an agent for restoration, as a target of invasive species, as a way of doing your forest management, and just think more creatively and holistically, and about how forests can provide both those private and public benefits. So I think in that context, then you can start thinking about eco-products. I think the idea is to think about what can forests be, and then what are the different markets that can get us there. So in the Pacific Northwest, in our context, it hasn't just been about these sadly rather fragmented and early markets for carbon and habitat and so on. But rather also accessing different forms of capital and stacking them with private equity to yield the type of forest management that we're trying to create. So in our context, and it'll be different in every context, of course, we have private equity as one source of capital, and what we want to deliver to our private equity investors is a competitive rate of return of an asset that's well managed and increasing in value. We have our philanthropic investors who have specific objectives around carbon, or around habitat, or around water. And then we have sort of our social investors, really government tax credit financing that are interested in the benefits that forests provide to low-income people and low-income communities. And we deliver to each of those constituencies the thing that they want, and then to the extent that there are changes we have to make to our forest management, for example, leaving more trees standing in riparian areas, we deliver that environmental benefit to our environmental funders, and the financing then goes to the equity investors to deliver competitive return. So that's how we do it in our context. But I think it's really, the message I would say is that if you just look at the small, fragmented eco-product market, it can feel fairly daunting. But if you take a broader look at what forests can and should be in the landscape, and the important role that they play socially, and the important role that they will play increasingly, then I think that opens up other opportunities to partner with industry and government to create the kind of landscape that we need to provide essential public services, as well as the private provision of fiber.
Fantastic. Thank you. So you guys are all professional investors. You've done deals. You know how they can be fluid. So I think we might just ignore that. And we'll take them off the script again. So people that know me well would know that I love a good story. And so what I wanted to finish with in our last 10 minutes, and we should be all hyper-conscious of the fact that we're in front of lunch, is in each of the areas where you have been making investments within the forestry space, you will have no doubt come up with a complex or complicated situation where your particular set of skills or abilities or fund mandate has allowed you to address that problem. So what I'd like to finish off with is some stories and learnings that are unique to your particular investment space, and how you bring those skills to bear in the transactions that you're investing in. And secondly, your forecast or your challenge for what the future of the forestry investments that you'd like to pursue will be. And maybe we'll start with Gerrity, given you're at the far
I think
end.
Charl can go first so I can think about my answer.
I found one out.
Yeah, I think a challenge has been so we bought a manager, a competitor manager in the U.S. and a challenge for us has been they have some assets that are rolling off over the next couple of years, and what do we do? Does it make sense to liquidate them, or does it make sense if they're really good assets? Why would you ever want to sell? It's something I've talked to Dave about, for example, a lot. And so I think a challenge for us is always making sure that any investment we do is always structured properly relative to the investment opportunity, right? So if it's something that's truly greenfield and you really need to develop it, you're nuts to do something in a 10-year structure, right? If it's something that's up and going and it's like a bond, sure, maybe, right? So I think that's sort of a challenge that we've faced recently, and it'll dovetail into my prediction. My prediction is, if you look at the institutional timberland space, a huge proportion, almost 50%, is owned by listed timber REITs, and I would argue that their incentives are not necessarily the best incentives in terms of how to treat the land long term, the timberland. I think it's more about what they're doing with their quarterly earnings and dividends and that type of thing. And we've experienced it and frankly been a beneficiary of it in terms of sometimes we get somewhat desperate phone calls, at certain times of the year when they need to do a transaction.
Excellent.
And then another issue there too is these companies consistently trade at a discount to their stated NAV, and the sort of a consistent investment thesis is, well, I think I can close that NAV gap. I think that I can help the company do some stuff to figure out how to close that 30 or 40% gap. But the reality of it is at this point, it's been 20 years of these companies being around, and they're always traded at a discount. So I think the reason for that is it's just not the right vehicle to own timberland in. I think timberland should be owned by a lot of different folks, but perhaps just institutional investors permanently in a private way, in a private structure that's evergreen and it's not marked to market often. So my prediction is I think over time, folks will realize this and perhaps try to liquidate some of these companies and put them in the hands of people who will make long-term decisions and hold them for the long term.
Excellent, thank you. Sounds like some increasing deal flow there. Bettina?
Yeah, maybe.
I'm going to stay on the theme of the integrated landscape, and so my prediction is that over the next couple of decades, the line between forest and agriculture and pastoral system management will blur. And we will become landscape managers. And in terms of a story, just sort of supporting story of that, we recently started investing in the interior West. So different than the rich, carbon-rich, productive forests of the West Coast, the interior West is characterized by a more, fire-prone landscape that has been intensively managed. It really is lacking productive capacity. A lot of the industry has rolled up their mills and left town, and what's behind is a fire-prone landscape, with a large number of trees growing in close proximity to each other and in line for disease and fire. So there was a property that came up for auction, and nobody was touching it. And so we went ahead and took a look at it. And again, this sort of integrated approach of bringing in government, bringing in philanthropic funding, and bringing in private equity. Here's an asset. I mean, the entire interior West is a very significant landscape. Harris Sherman, who's in the audience, could probably tell me how many millions of acres it is, because he was managing a large portion of that under the NRCS. And so we need to find a solution, to this landscape. So what we did is we brought together tax credit financing to a landscape that really it was not a private investment strategy because there's just really sort of no big trees to harvest and sort of mills present, but not in the kind of quantity, the kind of proximity that we wanted. And also partnered with 2 tribes for whom this property served as their ancestral homeland. And I should also mention that this property has one of the most important salmon streams in the Columbia River system. So it has very significant assets. And so we developed a strategy where we're managing the upland for restoration, the riparian, the riparian environment for fish, and bringing in, those three forms of capital. Our private investors are getting a very nice rate of return. We are engaged in a massive restoration project that is producing a high level of jobs and economic activity for a very distressed community. And the fish are getting the respect they deserve in terms of restoration. So just as an example of that kind of strategy.
Thanks very much. So Charl, you get to bring it home.
Thank you. Sarah's held up a sign saying 1 minute. So in terms of the investment challenge, I'll skip that one, but happy to talk that through. I've been a GP in infrastructure, an LP in alternatives and private equity, and now I guess sort of a GP again in forestry. And there are a whole lot of things swirling around about how institutions design mandates for alternatives, and I learnt a lot about that, so maybe that's a conversation for later. It's been touched on before, but prediction-wise, it seems to me that supply and demand trends for productive land are on a collision course, with demand being not only influenced but just by growth in what we do, but sustainable materials and potentially transformational technologies that will demand different kinds of fibre. Supply, for Bettina's reasons, will be limited by environmental needs, the closure of natural forests, and the use for other reasons, and climate change. So it seems to me that productive land is going to be the thing, and that'll need to be intensely managed, flexibly managed. We currently define ourselves as in forestry, and investors define their mandates to be in timberland or ag. But 30 years out, I guess we'd morph into managers of productive land, irrespective of what's on it. And I think that'll take a change in mandates, and it'll take a change in the whole way that GPs in this industry organise themselves and develop skill sets. Back to the Future Day, I was going to talk about levitating log carriers in Borneo, but I won't.
So thanks very much to our panel here. I hope you've all enjoyed their ability to wander through some core themes that we'd nutted out while also actively thinking on their feet, and it just shows the quality of the panel we've had here. So please join me in thanking them for their time.